Everyone, hope you're well and doing great on this Tuesday. Summer session CTM, making sure we do our best to keep our pulse on the market. There's a lot taking place, and you can even see from the headline today of today's session, we're talking about like, are you being set up? Is this a bear trap or something worse? So I'm gonna break that down for you in 1 second, and then like the thumbnail says, or is it a bull trap? So we'll start over there. We're going to start with the easy part, the low hanging fruit. And we are seeing right now Bitcoin here still on the breakup of its most recent consolidation. We see that I'm going to go like this. This is the consolidation. We had obviously April scare, the tariff scare, right? And then you could see that that's coming back into the news today. That's not out of the way in so much as that, last week there's a deal between the EU and the US, and now the president Donald Trump is warning of a 35% tariff on the EU if they fail to fulfill their commitments. So that's interesting, needless to say. And is that a question of, are we climbing the wall of worry right now? We all know, and it's gonna just like go ahead and bring it back over here. And this is something that we were setting up in our sessions coming back last week in real time. We could see over here, we could see that, we talked about the $1.6 trillion debt tsunami incoming. And if the markets are ready, and we talked about how the Fed, the Treasury, was actually getting ready to raise the TGA, which is the Treasury General Account. They were looking to go ahead, now that the debt ceiling has been worked out, they were looking to go ahead and add about 500, a little less than $500 billion, taking the Treasury General Account back towards that $850 billion level. And then we just noted, well, the last two times that happened, it was definitely a risk-off situation. We know that when the Treasury is actually draining from its reserves, it's very bullish for markets. It's very conducive for liquidity. And then the opposite is to be said as well. And when they're raising it, they're drawing out liquidity from the market, and that's a drag on liquidity. And we go back to the last time this happened over here in 2023, and we saw that the NASDAQ had corrected 14%. Go back to the previous time before that, and there was a much bigger correction, but there was a lot more going on in so much as the Fed just moved towards tightening. They began tapering their quantitative easing purchases. They began in March, actually the rate hiking cycle, and we all know that war broke out. On top of those three things, we also had the liquidity drain as the Treasury was raising their Treasury account. So that's taking place during a period of time that we knew ahead of time was just not, the most favorable. Well, it's unfavorable as far as just seasonalities. Historic seasonality suggests that August and into the first few weeks of September are just simply not the best. And during that particular time in August is when the Treasury is actually going ahead and they're issuing the most new issuances, and you could just see every day it's just lit up. And that then subsides a little bit in September, and by October, and if my memory serves me correct, in October they kind of just back off. So that's all going to be interesting. And coming into this current period, this was just our awareness. We've seen our positioning transform a lot in the last few days. We'll get into that in 1 second. I guess we want to start with the low hanging fruit, which I said. And, a lot of people are wondering, like, is this it? Is this the top? 4-year cycle points to the window between September and October as being the top. A lot of people now are looking, and from my view, and that's what I want to share with you. I want to give you my strong view to help you form your own, right? And I want to stay in front of it each and every day, because there's nothing easy about any of this. And it takes absorbing a lot of information each and every day, putting it together and staying ahead. And today, like, our topic for discussion on this Taco Tuesday is we're putting a lot of things out there. I'm saying to you, are you being set up? is a bear trap going to be set? That's what I'm getting at. Or is that not going to be a bear trap? And is that actually something worse? Is this going to be the first time in the last century that the markets have back to back double dip corrections of over 20% within just a few months of each other? Like we've seen a lot of firsts in our lifetime. There's no doubt that that could happen. Now that's far from my base case, but I worry. We say to ourselves, we have to watch the data. Is the Fed getting ready to cut into a recession and or normalization? And again, it's going to remind you, it's a big difference. When they're cutting into a recession, it's bad new bears. And when they're cutting into normalization, when they're cutting into growth, it is actually time to ride some waves. So that matters. And I say to you, well, we're going to watch the data. And recently, over the last week, the hard data has not been so nice. I mean, look, we've had a really horrific jobs numbers just last Friday. And then today, we see that services, U.S. is a service-based economy. Services PMI coming in lower than expected. It hasn't been the best data, right? Now, is that one that's going to make us say that, we've seen a deterioration and it's now pointing to an event-driven recession? No, not yet. There's also the idea of, could you trust the data, right? And listen, over the previous administration, we knew we couldn't trust the data, and we had to maneuver and operate even still. And during this administration, I think it's much the same. Still can't trust the data, and we have to operate nevertheless. I just summarized that article you're just looking at into Grok, and the article points, I'll just give you the headlines, the bullet points. Skepticism about official data. Obviously, that's something that we've held for a long time now. I'm not on board necessarily with what happened last week and Trump. Look, anyway, whatever. Seasonal adjustments and revisions. We all know the data keeps getting revised, right? And for the worse, real world versus reported data. Call for better data quality, yada, yada, yada. There's really nothing of signal there for us. But point being is that we're doing our best to navigate in this situation where we have to watch the data. We want to know, as the Fed begins cutting, are they cutting into growth or are they cutting into recession? And we're kind of like in a very peculiar place right here where it could go either way. Now, I did see last week, and I happen to believe it. I strongly, strongly support this. The president was saying that 5 months from now, we're really going to be starting to accelerate in growth. Now, I do happen to embrace that. That's my base view. And guess what? If I'm wrong, I hope to notice that I'm wrong as early as possible, and above all, follow the technicals. But that is also what I believe, and I believe here that, well, we'll keep going. As you all know, it's an ongoing discussion that we have each and every day, and you guys are all aware of it. This was a great reminder. I was thinking of this yesterday. I think we're all in the sync. Maybe we do live in the matrix. And I'm not ready to discuss because I just brought it up during the intro. And I'm going to leave it up here on my second tab here so that tomorrow we could take a look and discuss further. We might need to call on Luke, aka Lukastis, and get his view here of what's happening with high yield debt. I think that is very important. Again, we're up in the mountains. We just arrived. It's kind of like, some recessions going on here. I'm pretty sure Luke posted into the Discord yesterday actually just that. And then that would right there affirm how in sync we all are. So I'll come back to that tomorrow, and I'll make sure I'm prepared to get into that tomorrow. You all know yesterday I was saying, and I don't think it's happened, I just said, watch what happens if we wick down, right? Obviously, we closed strong yesterday, extremely strong. Throughout the rest of the afternoon, markets were bid and closed very strong. And then this morning, there's been a little hiccup. But that's just about a 50% retrace. I don't think that's a wick. I'm coming back down to the 3-day, and yeah, there's not much to say. Forming an inside bar, here on the 3-day, come back to the day. Look, it's just that cautious read at that level yesterday that I was giving, but not too much has taken place and or transpired. For me, it's like there's these short windows of opportunity. Yesterday, Asia Open, Sunday night, it was that overnight session into New York, and New York actually wound up giving lots of forward continuing momentum, especially into the close. This morning, it was actually the opposite, and it was shortly after New York closed, and there was that opportunity over here for that downside. And again, I feel like those two little, like, this is, in my view, it's not like, and I'm watching for it. If we fade, if we give this back, right? If we break down, retest, and if we come back down and resume down and we have a breakdown, then I'm looking for acceleration. But right now, it's kind of, for me, it's like, choose your spots, be quick in and out, and I'm not looking for that follow through that we saw Thursday and Friday, which were big. And that's just the way I'm viewing this summer play right here. I'll come back to that in a minute. I want to move over and continue over here, and I'm glad I don't have the image up this whole time. Otherwise, Ace would have been yelling at me. We can't see. We can't see. And then someone else would be like, well, whatever. You haven't hit the like button yet. Hit the like button. We are seeing over here the potential, and I put out like, or is this a bull trap? Like, listen, we have to cover all of our bases and be ready. We're not seeing on the breakout here some extension. We're not seeing that momentum. Look at the breakout, massive extension, right? Breakout, massive extension. In a healthy market, you would like to see some nice extension, breakout, extension, breakout, extension, breakout, extension. Is this a loss of momentum? Right over here, breakout, extension, breakout, extension, and then I don't know. That's just, I wouldn't say that's another breakout. So I'll let it go, and I will give this. This is a similar pattern that we actually had, an upward sloping trend line, but it was rejected here. We've broken out, and now we're in a particular moment in time where this is a pretty big level to hold, and I'll give you two views of it. This was just one sketch I had over here, and this is our breakout. And yes, we're coming in for a retest, and yes, we want to hold. And guess what? If we fail, what happens when you have failed patterns? Well, generally it's the liquidity grab, and then you see a big move the other way. That could be setting up. So get ready here, and we have our awareness about us, and so far it's still a retest, but I can't be setting up for you a longer term view of through let's call it the rest of the summer, through August and September, in what might be perceived, or what might actually be, I should say, like a bear trap being set up, which this is my base case, that I saw sentiment turn so quickly. Markets are just a stone throws off the all-time highs here, and like sentiment is very, 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 it turned quick, and a lot of people are it turned so quick that a lot of people are thinking it's over. The music's about to be cut, and I'm saying the music is just about being, getting ready to be turned up. Except things don't always happen as quick on our timeline as we like, and they take a little while to play out. Again, the president is like, hey, 5 months from now, I think that we begin hitting more of a sweet spot and really that return to growth. That seems very realistic to me. Now, a lot could happen between then and now, between now and then, I should say. And one thing I'm worried, or one thing I just want to add to this conversation, because I like it, I like the flow. One thing I want to add to this conversation is that probably the best thing that could happen for markets right now, markets are pricing in September, 90% chance they're going to cut. But we got some data between now and the next Fed meeting. Actually, we had the jobs numbers that was very, very, very poor. We got another one coming next month. We got inflation data coming twice at you. And you know what? If Powell doesn't do it, ooh, by the way, I guess now Jackson Hole this August becomes a lot more spicier. But if Powell doesn't cut in September, that's probably the best thing that could happen for markets, right? The president wants them to cut. If Powell doesn't cut and there's no cut, that's actually Because if indeed data is and continues to turn sour and they're cutting, look, I don't care what my views were. I'm adjusting in real time always and want to make sure I stay ahead of it. Is this setting up here? Was this actually a bull trap? Now, I don't know personally how many people, like, I remember what it was like for retail last cycle. Obviously, we know retail's not participating this cycle, and we know it's about, early majority. I saw someone today post that we're in late majority, 40% adoption. That's a good friend of mine, so I don't want to really dig into that, but maybe tomorrow. And so anyway, like MicroStrategy continues their bid. Is the FOMO into this? If this is a bull trap, is it the late stage treasury companies, or are they early, the ones that are turning into treasury companies right now? I believe that obviously zoomed out they're early, but for this cycle right here, people talking about the outflows. Let me go ahead and give some context over here. I got a recap over here, and I just want to go ahead and, Cabby saying, look, if I understand what's going on here, we have the Treasury General Account filling up, bearish on markets. We have the historical trends, which indicate a bearish August, September for Bitcoin, but for markets in general. Tariffs are still newsworthy, and we saw that today with Trump and the EU and the 35% tariff, and aside from that, more so. We have massive Bitcoin and Ethereum outflows. Seems to me that discretionary out is in the cards, even with CTM bull runs and CTM IBIT in the markets. I know things can change on a dime. Help me out and tell me why I am right or wrong to be bearish. So I'm gonna start there. First of all, I'm gonna take all of that in. So to do that, I'm jumping right here, and I'm gonna start with IBIT. And we had an entry on IBIT, and then right away we have a pending close long. So unless we see some type of bounce today, but a bounce could happen. I mean, it could happen. Or if we break down though, and I have to get into the TA, sorry, I have to get that exact, look, guys, we talked about yesterday, breakdown, we into that retest. We didn't get neutral. We didn't neutralize it. And now we're coming down for the retest of the resumption. And if we break this line, then we're coming into a hold your breath type moment, the yellow. And if we don't bounce there, then this becomes a deeper recovery, right? And I'll get back to what that deeper recovery means and what it looks like. And by the way, on the break of this is close to where Bitcoin bull runs will be exiting the market, because I'm going to talk about IBIT and I'm going to talk about Bitcoin bull runs. And before I do, let's just talk about the outflows. And you can see there's been a little bit of outflows over the last couple of days. I say a little bit because this is like these inflows and outflows, they do strongly, for the most part, follow what happens with price. And I could say over here was a 30% drawdown on Bitcoin, and the outflows were actually pretty good, pretty well managed. Pretty well managed. What was the move out of the bottom in April to the top? So 24%, check this out, 24% move up after having a what's going on, Jordan? You're not into April. So the math didn't add up for me. If you have a 30% drawdown, you need a much bigger recovery. 65% move up. Guys, let's be real here. We just saw a 65% move up on a market cap that's, at the time was greater than $1 trillion, $1.5 trillion, and 65% move up in months. And now price is what? It's barely pulled back and is consolidating. And from my view, looks extremely healthy. And by the way, if we are lucky enough to get a controlled consolidation during these couple of months here, as we have adverse conditions TGA refill as we have poor seasonalities. And if we're able to get some type, I'm talking about markets and Bitcoin together. If we're able to get some type of controlled consolidation, how that's bullish. That's very, very, very bullish and very healthy. Markets just went through an episode. It was a great unknown as US trade deals worldwide are being revamped. There was a lot of fear and uncertainty, and markets did what they did during that particular moment. They over exaggerated, and now they've bounced and recovered. And a lot of people, I think, a little bit, just give it a little bit of time here. Let's try to we saw this period coming ahead of time. If you go and you look at what's taking place here on our daily conversations together, before we moved into this period of seasonalities, we said, have we come too far too quick, and what should our expectations be? That's it. We're just ready for it, and everything seems to be well and on time. So let's not get sensational. This seems really, really so far controlled. If we break down over here on Bitcoin, we could see a move into that yellow line. If that breaks, yes, my expectations are we come down lower into the pocket. That's all still fine. And for Bitcoin during a bull market, yes, we're in a bull market. That is also quite controlled. I'm coming down over here in a 15% correction. That's not nothing, right? Expect always at least a 30%. This bull market is different as we entered early majority, in so much as thus far, drawdowns have only been 30% in the bull market. It's the first time ever. That's another thing that's different. A lot of people are looking for much of the same, and I'm pointing out as early as possible the things that are different. So what about IBIT? And IBIT over here just entered the market, and now potentially, right now it's closed long pending. And if this is confirmed without a bounce by the end of the session, this trade then exits, right? Ahead of its full stop loss, where it just exits the trade tomorrow morning on the open. Is that normal? Is that abnormal? I'm going to go ahead and say, look, it's almost common on Tesla and Nvidia to enter a trade. They have very tight stop losses, and on that same day to get stopped out, and then that same day for the next day enter buy pending or confirmed at the end of the day. That's almost common, in an uptrend, tight stop loss, get stopped out, next day pending long again. Is this uncommon? Is this rare and unusual? No, not at all. You can see entry, price action on that entry going the wrong way. We were just right at the zero line. Seems normal, controlled, and safe. This is just CTM templates doing CTM templates things. We see, by the way, FNGU, MicroStrategy, and Tesla are out of the market, and we went from being strongly positioned to now being lightly positioned. And if this exits today, IBIT, then we only have 2 positions open on stocks. And by the way, it's only Bitcoin bull runs on Bitcoin and crypto. So going back last week, we were like, except for Bitcoin on our swing trades, we're fully positioned on the long side to crypto. And then look how quick and nimble we were able to maneuver, as the markets right now have just taken a little bit of a sentiment turn. By the way, if this is indeed, I want to make sure that I include this. If this is indeed a bear trap being set up, you see how quickly sentiment has turned. If we get some follow through on the downside during this unfavorable period that we've just entered, and that sentiment, which went from I'm like, well, we're just off the highs. People are like, yeah, but and this is right. Go back to 2008. NASDAQ just makes an all-time high, and then huge sell-off. Like, it could happen, right? But I'm sorry, that was the first time all day that we lost the flow for a quick second. What I'm getting at over here, though, is if this is indeed a bear trap being set up, if we get during this period that we're looking at some further downside momentum, and on the NASDAQ, we're still above the breakout. Here is the most recent breakout. We're still above it. This is not yet any type of bearish breakdowns occurring. Same thing with Bitcoin. That last leg up is still so far holding. If we get breakdowns, we'll note them. And the first or earliest breakdown I could give you on the NASDAQ is that purple line. And then this would be the big one. Trading below it, yeah, then I expect some follow through to the downside. Once we see CTAs who are max long, if we get to a point where they begin selling, I think that's when we have the opportunity for the trap to be set. Outside of that, there's no chance of a bear trap. If we get some breakdowns on the NASDAQ, trade below the most recent breakout to all-time highs, if we get to a point that CTAs begin selling, watch. That's the moment, the earliest moment that I'd be looking for a trap. Again, if that plays out, we'll be there. We'll watch it together. Moving back over here, we can see very quickly we're still holding TQQQ and NVIDIA, and they both look good. The market right now, a lot of people are concerned. The market right now is about 23% of weighting towards Microsoft, towards NVIDIA, and towards Apple. Apple just coming out with good earnings. I Nvidia is a beast. Nvidia's earnings, by the way, they always follow earnings seasons a little bit later. Let's go ahead and look at when earnings are coming up. I mean, just so we have it ahead of us. End of the summer, August. And Microsoft's been a beast. They strongly beat their earnings and expectations. I think it's good to have the market heavily weighted towards those particular companies at this particular moment. Anyway, we're still holding over here. You can see that we are, as price consolidates over here, getting close to locking in further profits on NVIDIA. And if we get any further downside momentum, we're going to be quick to exit and lock in some profit. I think we're navigating this very well, very strongly. Crypto's a lot different. We've seen only Bitcoin bull runs now in the market. So that was the IBIT portion. We did the ETF inflows and outflows, and I'm not seeing it. I pointed to that big drawdown of 30%, and then we had a 65% gain. But the inflows during the gain were much greater than the outflows during the drawdown. We know that the ETFs, they're highly correlated to the price action. And when price is rising, there's funds flowing in. And when price is coming off, there's funds flowing out. But I could say that there were much more funds flowing in than flowing out between, whatever that is. That's 40 billion to 30. So $5 billion flowing out, and then you go 35 billion to 20 billion flowing in. It's a 4-to-1 ratio. So now when you see a little bit flow out, that's nothing, for my opinion. Now, could it be the start? Absolutely, it could be the start, but in just zoomed out perspective, that's nothing. You've seen Bitcoin come off a little bit, and then you see that's normal. Overall, the inflows are much, much greater. So trying to cover everything over here as far as the understanding, and I'm also making the case of why you shouldn't be bearish, right? Like, yes, we've seen our positioning go from pretty strong to out and a lot more neutral. And that's exactly what it looks like here as you move into all of our 8-hour templates here as Ethereum just exits out of the market. And only Bitcoin bull runs is in the market. And Bitcoin bull runs over here will be in the market probably to somewhere around, 103, right? And we just entered over here, and that would be like a break even. But if momentum rolls over, that's when we get out. And then you can see from our discretionary standpoint over here, I don't know if I like this one, but this is a little noisy for me. But it's what I have to work with. So I talked about this area over here, this resistance, this support, this touch of support. If that breaks, that's not a good sign. And you could see close to that break-in, and there's the wick over there. Like, this is exact as I could get. And if that's breaking, that's just below 105, just above 104. and that's when we're exiting Bitcoin bull runs, which seems to me to be the right thing to do. But you can't be bearish here. I mean, obviously we had the first early breakdown of the yellow line. We were looking for it. We're aware of it. We haven't broken our line in the sand yet. And even if we do, we still say that we have this, like below here, you could be more bearish, I will say. And if we break over here, yes, then likely this correction is going to be longer lasting in time and duration. And even if we come back into here, which is, let's call it 93 and a half, which is well in line with what just a normal pullback is, and why I don't want to see it, 25% pullback, it's still, as far as the structure, nothing is wrong and everything is right. And for this time of the year, there would be nothing wrong with it. And it doesn't have to happen. Those are worst case scenarios. Or as far as I can see, worst case scenarios. And are they worst case? Guys, like, time is running out as far as when the opportunity to save in Bitcoin will no longer be with us. We are in early majority, and we won't always be in early majority. There's a couple of things that I just wanted to run by and run down. And the way I look at it personally, and is that we have until roughly January of 2027 for maybe the opportunity to accumulate Bitcoin under 113,000. And if we were to get a 25% correction here, and that's an opportunity for someone to make a DCA and get Bitcoin, yes, 55,000 Bitcoin's cheap. Yes, past 2027, 113,000 Bitcoin is cheap. We're here for the long game. And the long game is running out because over the next 10 years, we're going from early majority into late majority very quickly. And these next 5 years that we have are very important. The race for AI, a lot of people are concerned about, their livelihoods. We need to make smart decisions. We need to make good decisions. And we need to make very methodical, systematic, balanced decisions. So earnings were very good. Again, it's hard to believe we're headed into a recession as earnings continue to be good. Yes, we don't, and that's very clear. We don't want to break. We don't want to break over here. This is the last line for me. And if that happens, then this becomes a bigger thing. But again, I've been very clear and precise. I don't need to get into that. I would like to see a breakout and carry. And we talked about what a measured move is by the end of the year. And in doing it, I mean, you guys know my tone. Why a measured move by December was $170,000. I personally felt a lot more comfortable with something like 150,000, and I think that would be extraordinarily bullish and sustainable. So, I look, nothing's happened. Let's see what happens as we move into October, November, and yes, again, we just talked about like on breakouts, that extension is healthy. And this is not really the breakout, though. I want to be fair because this is how we viewed that. And when I want to be fair, and we talked about the breakout was down here. This is the breakout. And that was a massive move up. And then you consolidated again. And then you made a leg up. And yes, a lot of people have 4-year cycle behavior ingrained in them. And they're looking for Bitcoin to start roaring. Look, monetary policy is not aligned. It's just simply not there. It's not time for bull of all bulls to run. I've been consistent in telling you that since I called the bull market breakout in December of 2022. Now, we are seeing a different dynamic that I've been trying to work out and lay out with you with fiscal dominance and what is taking place. But that's not like things don't work like this. And again, let's see what we're looking like into the end of the year. So a bear trap and when I talk about bear trap, I'm talking less on Bitcoin. I'm talking a lot more on what's taking place here. And so far, there's no trap being set. Sentiment has weirdly turned very quickly. We are a heartbeat off of all-time highs, coming off a massive drawdown, and during that scare, like the only time price has been this far extended after such a drawdown is back in 1998, when also the markets were coming off back-to-back 20% plus years of gains. We know that not only was 1998 a good year into the conclusion, and look at the consolidation this time of year during the seasonalities, right on time. And it doesn't mean that's what's going to happen this time. And it doesn't mean that we can't enter into some type of pullback. Now, I've tried to make the case why it would be highly unusual. It would be rare to have another 20% drawdown. It would, not that it can't happen, it would just be really rare. And I feel like a lot of people are looking right now to call the market top and they're looking for a crash. And I'm saying, well, the way that I view it is we're just off the all-time highs. We haven't yet taken out, which would be a liquidity grab. And, if we did, like above, it's a far drawdown, I imagine. Let me go ahead and see how far that is. That's a big drawdown. 18%. Hey, that's back to back 20% drawdown. We would need to break this level that I'm pointing out to you right over here, like from here, in order to, like, I would think that holds us support if retested. I don't think that that's in the cards. I sincerely don't. And why we talked about, I remember talking about as the TGA began this episode of refilling, how it could be bearish on liquidity, how last time it's happened and the previous two times it's happened, it's definitely put a drag on risk. We saw the risk correct 14%. And we pointed out, I don't even know why, but we pointed out why like an 11% correction on the NASDAQ would just be well within the norm. Well, until we surpass that, I'm trying to get off this. I can't. Until we surpass that, I feel like everything is looking extremely healthy. Now, I've given two scenarios, and even the bull trap I've talked about is quite bullish. I'm not giving a bearish scenario on that. And I've talked about, if a bear trap is being set up, and obviously that's just bullish, but I haven't talked about whether or not this is something worse. And if indeed we're headed into something bigger, and is this like 1998 style? Let's see, we'll go back over here. Sorry, 1998, 2008 style. And you see that over here, markets able to make a new all-time high. And then boom. Look at that sell-off, by the way. Look at that 3-day sell-off. That was nasty. Bear pattern, bear flag set up. Massive continuation down. We got to be ready for it. It's not what's happening right now. A lot of people are looking for it. But a lot of people are always in the habit of calling tops. And I'm not. The markets are not crashing. Let's play a little head snack here and see if there's anything else we want to end up with to continue this conversation today. But it is Tuesday, and let's bring out Taco Tuesday head snack.
Analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend.
And that's what I wanted to bring up. That's what made me reminded me of head snack here is the markets are not crashing. And a lot of people are literally in setting up and changing their whole, the whole view and looking for the markets just crashed. That was during April, right? And right now here, they've put in a very strong recovery. Things from my standpoint, I continue to monitor. Of course, I have worries, but and we've seen a deterioration of the data over the last week, so that's what I'm watching for. Nevertheless, here, if the markets crash, and you could go back to uh, the past crashes, we've been on the right side. I hope we're able to be on the right side. I do not consider this a de-risk event. If Bitcoin loses the breakout over here, it's not for me a de-risk event. You remember de-risk events? You remember coming back to the last bull market, the break of 53,100? De-risk, make sure your loans are paid off, take all profits, obviously holding spot, but do not, that's it. That I don't consider this to be a de-risk event. I don't think that the bull market is close to over, and we'll continue at it each and every day. Listen, this is a great time though. Uh, Invite a friend, get them involved in what we're doing, in so much as that all of our Bitcoin and crypto positionings have now gotten on the sidelines. We only have IBIT still into the market, and then T Triple Q and Nvidia, and it's a good time to get ready for when that next wave comes in, to be ahead of it. Everyone, have a beautiful day. Summer sessions upon us. Let's keep it short and concise. I like the flow. Great to be here. You know why? I finally slept last night. It's been weeks since we've had a full night's sleep with the kid. But last night I slept, and there you go. It's indicative of the flow today. Gotta love it. Everyone, God bless you all. I'll see you all tomorrow. Have a beautiful day.